We gotta focus on gold after a vicious, brutal sell-off yesterday. We're seeing signs of life today. Is this it? Was this the bottom in gold? We're gonna talk about the technicals today, and I want to show you a correlation that not enough people are paying attention to that would explain this recent sell-off in gold. And it would also clearly show us why gold will turn around after this waterfall sell-off, this last leg down in the correction. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wahami. No Knicks talk today. People are hurting with the developments in gold and silver and the precious metals. So let's jump right into gold. We saw the continuation of the waterfall sell-off that I've been predicting for weeks now would happen, and it's happened out pretty much exactly as I had predicted. I had plenty of things wrong in the market. Got that one pretty right. We broke the 200 first leg down of the waterfall sell-off. Fought with the uptrend, the green line that you see here in the chart for a little bit. This is the uptrend that goes all the way back to December 2024. So we had this nasty consolidation here in gold that went on basically all winter. And then we made a low, we made a higher low, and off we were, and it was party time from there on. This is the uptrend that then was broken, and that led to the second waterfall day that we saw yesterday. And now the question is, okay, we finally have a green candle, hooray. Is this it? In Asian trading today, we touched the blue support zone, and we're trying to regain the low that you see here in purple from March. So could this be it? I told you that we're likely going to see the lows in Asian trading because that's what had happened the previous corrections at the end of January and then in March. I do not think that's the end of it yet. First reason is we basically closed yesterday at the low. And I've been telling you for a while now in technical analysis, if you close at the low of the day after a strong sell-off day, that usually means it's not the end of the sales. It's just that the market ran out of time, right? The trading session closed, but the market was not finished selling. It's just time was up. That's not usually how waterfall corrections end. Waterfall corrections end like we saw here in March. Waterfall, and then you get this long candle, this intraday candle with a flush sell-off where everybody gets stopped out and sells in panic and throws in the towel. But then it reverses intraday, and we saw this in January too. We saw it twice, right? With this monster day here, the sell-off, and then another one right the day after. So this is more what we should look for in this waterfall sell-off, not what we're seeing right now. What we're seeing right now is just a leg down, a big leg down. It got the RSI to a very oversold area, and it's overdue for a short-term bounce. Now we will see, what is this bounce worth? If we go to a lower time frame and we go to the hourly, then we can see very clearly that the lows happened at 1 o'clock in the morning European time, so Asian trading. As I told you before, that's where the lows usually get made right now. And then we build out some really good structure. But let's see where this will take us. What I want to see is, does this structure hold? Will we get additional buying? Or is this just some short-term covering and then eventually we're going down to 4K? Or, as I predict, we're going to undercut it for another liquidity grab. If we undercut it, so we drop below the zone, we trigger all the stops that are sitting below 4K and below the lower end of the zone. That's what a liquidity grab is, what institutions like to do. But then we do not bounce quickly back above 4K. Then we have to talk about 3,500, which is the retest of this breakout in the early fall 2025 that led to the monster ABC rally that we saw in the fall, winter, and then in January in gold, which eventually led us to 5,600. People have been clamoring for the retest. I've said for a month that I do not think we're going to get the retest. I still stand by that, but I have to say the probabilities have increased that we see the retest, and I'm going to show you why in a second. So, let's see what happens today with this rebound. If this is really some structure that can help us, or is this like a day like here at the 200 or here at the uptrend, and then eventually the next leg down happens. This is what I anticipate will happen. A good end of a sell-off structure is this. Flush sale, intraday reversal, then you get a green candle, but you don't even get close to the old lows. Well, we don't have that. We actually made new lows in Asian trading. So this is not comparable. Now, let me show you a chart that not enough people are paying attention to, and that is the bond market. And let's go to the US 30 year. I've been telling you for weeks, we're building out, well, something is changing in the bond market. I've been telling you for about, what is this? Sorry about that. Sometimes TradingView is just annoying the way they do things. So here we go. So we broke the downtrend in the 30 year. We build out structure above the 50-day. This all looks pretty bullish. But the interesting part is obviously this yellow resistance zone. And this is a monster zone. As you can see, I'm still zooming out. We're already in 2024. So this zone goes all the way back to 2023. We doinked off it numerous times. We're not able to break through. If we break through, that is brutal for gold, because rising yields, rising bond market, negative for gold. This is a historic correlation, goes all the way back. Now, let's go back in history, and I'll go to the weekly on this, and go to the last time we had a similar situation in the bond market. And this is 2019 to 2022. So also a long time, as you can see here, right? We were below this resistance zone, and we built out a base, and then we broke out. Now, let me take off the RSI and let me overlay this, and I hope this will work. So, I'm gonna add the gold price to this chart. I'm gonna obviously make it gold because, you know, this is how we rock here. Here we go. This is more orangey. So here's the gold. There we go. So I overlay the gold price and the 30 year. And look at this purple triangle. This is the breakout from the consolidation that we see here. bond prices go up significantly. And as you can see, the gold price is declining significantly. And we've seen this before too, right? You look here, bonds are going up, gold is going down. This is the negative correlation that I talked about. But what we really care about is we see this breakout, we see this powerful move, and this leads to declining gold prices. So if we look at today, where we have a very similar situation than we did here, just a long-term base forming that got tested numerous times, failed, then the breakout is coming. Gold is declining. Ahead of it, we had a gold market going up, right? Actually as far back as 2019, but we had this long correction here. So we had a rise in the gold price, bond market breaks out, 30-year decline. We have the same setup now. We'll see if the bond market breaks out. But what I think is happening right now in the market is, if you look at this, you can see, yeah, the bonds have moved up a little bit, but gold has declined significantly more, which in part has to do with the strength of the dollar and obviously the hype in the gold market that had to be corrected, and the higher risk of interest rate hikes, and obviously the declining probability of interest rate cuts. That's all true. But I think what's happening here really is the gold market is front running a breakout in the bonds. That's really what's happening. So this leads us to an interesting situation. If the breakout really happens, how much of this breakout that will then happen is already in the gold price? And I would say a fair amount. Because if we look at the factors, except the bond market that you see right here, yes, short term, the probability of interest rate cuts now has been reduced, but overall, the factors supporting gold mid to long term have actually increased. The situation for gold has gotten better in the past 6 months. It's wild. We are right now at levels where we were in November 2025. But if you look back at the situation, fundamentally, gold is looking way better with, again, okay, sentiment now is more negative than it was in November, but that's always short term, so that doesn't really count. The interest rate cuts that the market was trading for in November, that's off the table. But we're also not necessarily going to get interest rate hikes, so that's neutral. And everybody's pretty convinced, including myself, that interest rate cuts are going to come. Everything else, inflation, stagflation risk, geopolitical risk, it's higher now, it's better now for gold than it was 6 months ago, but the gold price is at the same price. Doesn't really make sense. Makes sense when we look at the bond market. So if we look at the 30-year and the gold price, and we go back 10 years, we see that gold rallies when bonds go down. Again, that makes a lot of sense. When bonds go up, gold goes down. There are also periods where both go up, right? For example, here. But again, especially when we talk about this part right here, this is hype, right? So I am not too worried about the bonds going up midterm, like in the medium time frame, because we have seen gold and bonds go up, and that usually makes sense when the inflation becomes a topic again. But this breakout right? Right here, this move. This will definitely, in my opinion, push down gold prices. And we got to see how far ahead are we already in gold anticipating this move. So I believe that we already have a large part of this in the market and it's anticipating this. So we probably, and this is what I'm envisioning happening, and that in a narrative makes complete sense, we would get a flush sell like this once the bonds break out. Maybe not in a day, maybe over a week. And then, to the surprise of the majority of the people, the bond market would continue its move up, but it wouldn't affect gold anymore. And the reason is because we're front run it. It's already in the gold price. So, we're going to have to pay very close attention to what's happening in the bond market and how gold reacts to it. Now, what does that mean for us short term? That means right now, we have to wait. Let's not try to be smarter than the market. I've said this here before numerous times. If you missed these videos, when I was predicting the waterfall sell-off in gold and I warned you about the bond markets weeks ago, hit the subscribe button. A waterfall sell-off usually doesn't end in the technical setup that we have seen in the past days. It makes sense long term. And again, remember, all the central banks are buying. All the big players are still bullish for gold, and for good reasons. It would make complete sense to undercut 4K, to trigger the stops for the big players in the market, and to scoop up all their gold for a cheaper price. So I believe we're going to get another down days. There's another leg lower here, and then we will see how the market reacts. Right now, we need to take a step back, and we need to understand that this is not a market where we need to be over anxious and jump right in, guns blazing into the saloon like the cowboy. Right? So the long-term factors, yes, they're bullish. But short-term, there's not much that could move gold immediately. It would have to be, at this point, a peace agreement to open up the Strait of Hormuz for good. I don't think even a Trump tweet about this would lead to a longer change of sentiment towards gold. It would have to be a real peace deal that shows that, okay, this is sustainable for the oil price to go down, for the pressure to decrease, that rate hikes could be coming, which I'm not convinced is going to happen, not with midterms coming up, but that's what the market is playing right now. Therefore, then, for the short sellers to close their position, and then we can build real structure on the higher time frames. And that included with a liquidity grab, a waterfall sell-off. That is the type of typical market setup that historically then is the signal for turnaround in gold. That's it for today. Have a great day. We'll see us tomorrow. Again, hit the subscribe button if you like the content of this video. And on the weekend, we'll obviously look at the weekly candles of gold and silver. Very important video. And we have a newsletter video for our free VIP newsletter. Link is in the comments. So we're not going to spam you. You're just going to get quality content about once or twice a month. We'll talk about commodities, things in the markets, topics in the markets that we do not have time to talk about in the daily show. This time, good topic. It's about behavioral finance, psychology, market psychology, what to do if you're underwater with your positions in gold and with the miners. Have a good day. Talk to you tomorrow. Bye-bye.